Hey everyone, Ben here and welcome to Motivation to Invest. In this video, I'm going to be diving into a brand new software IPO. This is a brand new company in the software industry, and ARK Invest, one of the original Tesla bulls, has just loaded up on this stock. But that's not all. Some major venture capital firms are also invested into this company, including Sequoia Capital, one of the original investors into Google, in addition to Kleiner Perkins, who also invested in early stage Amazon and many other great companies. So this is going to be a really special video, guys, and you're not going to want to miss this one. But before we get right into it, guys, if you haven't subscribed yet, feel free to join the investing family. Only if you want more exclusive stock market analysis, deep dive analysis, and investing tips, then feel free to hit that subscribe button and turn that notification bell on, where you'll be informed when I invest my own personal money into these great stocks. And also, if you do find any value in this video at all and you appreciate all the research which has gone into it, then feel free to give this video a big thumbs up. That helps out tremendously with the channel. And with that being said, let's dive in. So let's not waste any more time, guys. Let's hop right over to ARK Invest live trades. And as we can see here, there's a stock which I spotted today, and it's called UiPath Incorporated, ticker symbol PATH, and this is on the New York Stock Exchange. It's a brand new IPO, and they bought $43 million worth of shares in this company. So let's dive into what this company is, what it does, and those juicy financials. So here we are straight away. UiPath climbs 23% in stock market debut after one of the largest US software IPOs in history. Now, for those of you guys which don't know, I love software companies, and not just for some superficial reason. They're actually the best companies to invest into if you can get them at a good price, because they have high operating margins and they can easily expand. For example, let's say Facebook, if we call that a traditional software company, even though it's a bit different. Let's say Facebook want to expand and add another 1 million users or 2 million users or 1 billion users. Then Facebook doesn't have to go out there and build more factories, actually supply more vehicles, the same way an automotive company might have to actually increase their manufacturing capacity to do this. So that is why I really do like software companies. They are effectively cash machines. So this company has experienced high growth, and over the past year, the company has grown its revenues by over 81%. Now, generally, I say a growth stock as one which is growing at least 20% per year, so 81% is incredible. The show goes on! So the company's revenue has been surging, and its losses have also been decreasing over time. So the company's gross margin is 89%, which is among the highest in the software industry. So what's the background of this company? Well, UiPath was founded by a former Microsoft engineer who lives in Romania. Now, what I do like about this software company, this enterprise software company, is they have an established customer base of major players. So if I dive into that right here, you can see they have over 80% of the Fortune 10. So you've got Chevron here, EDF, over 63% of the Fortune 500. We've got Takeda Pharmaceutical, which is a major Japanese pharmaceutical company. I've previously done a video on this company. They have over 7,960 customers in the financial services industry, Bank of America, in the technology industry. They've got Adobe here, Autodesk, CrowdStrike, all great companies. I'm actually invested into CrowdStrike and Autodesk. And in the retail manufacturing logistics space, we've got Chipotle, we've got Toyota, we've got DHL. So this company has a vast array of customers, and they're also spending more with the company. So the company's customers currently have a net dollar retention rate of 145%. This means the customers of the company are actually spending more with the company, and that's a great sign to see. So if we hop right on over to the share price, so the company recently IPO'd, so it shot up by 17%. It's now corrected down by around 7%. The market at the moment is depressed for IPOs, so there could be potential for opportunity. It's not like it was in 2020 where it was just completely crazy. Everything just went up, 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 and it was just mental.
Stocks only go up.
The market cap for this company is $39 billion, so still quite a small company. Revenue $600 million, so you can see it's trading at quite a high multiple at the moment. If we dive into what this company actually does, because it might be confusing people, you're thinking, okay, what does this company actually do? Well, this company offers automated solutions, but basically the industry that this company is in is called the robotic process automation. And basically the idea with this company is it automates repetitive tasks for large organizations using artificial intelligence and other technology solutions. So the global robotic process automation RPA software revenue is projected to reach 1.89 billion in 2021, an increase of 19.5% from 2020. That's according to research from Gartner. So this is a growing and fast-moving industry. You could call robotic process automation the new outsourcing. So previously, these big companies, they outsource labor to the Far East, to India, to all these different places. That's where they'd outsource their labor. Now, instead of outsourcing their labor, they can just basically hire robots to do mundane and repetitive tasks in companies. So yes, the robots are coming.
Skynet is the virus.
She'll be back.
So let's hop on over to those juicy financials and I'll show you exactly how this company is performing and their strategy moving forward. But the company's actually gross profitable and free cash flow positive at the moment. However, the company is spending a lot on sales and marketing and research and development. So as you can see here, sales and marketing operating expenses, 189 million spent in 2019, then that increased to 483 million, then that is now around 380 million spent on sales and marketing in 2021. I do like that they actually increased their spending on this in 2020, perhaps trying to take advantage of the digital revolution across companies, as many large organizations were actually being forced to actually spend more on digital infrastructure. And if we dive into the research and development here, they're also spending a lot on R&D. So that's up to $109 million in 2021. So the company's strategy, as far as I can see from looking at these numbers, seems to be they're increasing their sales and marketing spend in order to actually grow market share of the company. And they're also increasing the research and development spend in order to actually improve the technology for their customers. So you could say that these are great investments, but only time will tell in the future whether these will pay off. Now, there is one major red flag I do need to point out with this company, and I'll dive right into it in this video. So the first positive I'd say, before I get into that red flag, is the company has a large insider ownership, and that is one of the main factors I look for when investing into any company. I want to see the management of the company, the leadership of the company, battle tested with skin in the game, and if that company goes down, they go down with the company. So the CEO, Daniel Dines, the former Microsoft engineer, he currently has over 20% of the company, so that's fantastic to see. And we've also got these great venture capital firms here, Sequoia Capital here. They own around 1% of the company. But this is the worrying factor which I spotted recently, and I don't think anyone's really picked up on this. So the CEO actually sold $77 million worth of shares as soon as the company IPO'd. So 23rd of April 2021, $77 million worth of shares at $56 per share. Now the stock's currently trading around 75. So he basically sold out as soon as the company IPO'd. Now, of course, he owns 20% of the company. He's ran this company for a long period of time and he wants to obviously take a bit of cash. So he does want to exit a little bit there. I can see that and I can sort of justify that. And he still owns 20% of the company, so I don't consider this too bad. Doesn't seem like he's lost faith in the company, but still a worrying factor if you really did have faith in the company. You've held on this long, why not hold on for at least another year, another 2 years, and then actually sell some shares? I actually plugged in all the numbers for this company into my deep dive valuation model, and I'm going to reveal to you guys my full valuation for the company and the company's buy point. So I've plugged in all the numbers here. I won't bore you with the details. This valuation spreadsheet is available to download in the VIP group, so I'll leave a link for that in the description below. I've done this for around 25 to 30 stocks at the moment. Check out my fair value of various different stocks. You can plug in your own numbers into this spreadsheet and actually calculate your own fair value using a discounted cash flow calculation for various companies. So I'll leave that in the description below. Also, if you guys want access to my buy and sell signals and my entire portfolio and a thriving community of investors, you can also access that in the VIP group, and it's all for the price of a coffee. So I'll leave a link for that in the description below. So diving in here, I'm predicting 80% revenue growth for next year, which is in line with what it achieved in 2020. After that, I'm dropping that to around 60% for the next 2 to 5 years. Of course, this is just my story with the company, how I think this company could unfold. But of course, you guys may be more optimistic, and hopefully that's backed up by some sort of fact or insight you may have. According to my valuation output, the fair value per share is $47. Now, the stock's currently trading at $75, so it's looking to be overvalued, no surprise. However, if we put a 70% growth rate for the next 2 to 5 years, so this is where it gets interesting. If we put 70% growth rate for the next 2 to 5 years, then the company's currently trading at $75 and its fair value is $70, so it's pretty close to fair value. If the company can grow, so this is what it all comes down to, if the company can grow 80% next year and then 70% for the next 2 to 5 years, and this is investing, guys, especially in growth companies, you're basically trying to predict the future and you're basically expecting this company to continue growing at such a fast pace. And basically, the further you go out into the future and the higher your estimates, the higher the risk it is for you as an investor. So that's why really it's best to be conservative with estimates or just realistic, which is the best way to be. I personally think so. But at the moment, the market I can see is pricing the company to grow 80% next year and 70% over the next 2 to 5 years. And basically, the larger a company grows, the harder it is to grow its revenues at that sort of percentage rate. At 7% growth rate for the next 2 to 5 years, the company will have revenues of $31 billion in 10 years. Now, the company's revenue is just $600 million at the moment, so it's got to grow to $31 billion in 10 years. Now, Salesforce, the major global enterprise software company. Now, Salesforce currently has a revenue of $21 billion. So this would be $10 billion more than Salesforce is currently bringing in. Now, Salesforce is growing at around 20% per year at the moment, so it's a much larger company. So the market is basically pricing this company as being the next Salesforce, and I'm unsure of whether it can be the next Salesforce. I think it has quite a niche product. So the price of sales for this company, looking backwards, is 69. So you're paying 69 times the company's sales. Salesforce has a price of sales of just 10. So personally, Salesforce could be great value right now. They did a very large acquisition and the company's stock did take a hit. So Salesforce could actually be a good value play right now. Also a software company. And if I could get the stock for around $47 or less, then personally, I'd load up the truck with this company. But maybe you're more optimistic on this company. The major competitors are Automation Anywhere. I'd love to hear your thoughts on this company. If you guys actually work in any large company, any large enterprise, I believe in the banking sector, many people are using Automation Everywhere and UiPath at the moment. I'd love to hear your thoughts on the software, if you think it's useful, if you think these softwares are going to actually take your job in the future. And also Microsoft Power Automate seems to do similar things. These companies all integrate with Salesforce. So Salesforce is obviously very popular across all enterprises, which are basically large organizations. So that's my deep dive of this brand new IPO. Of course, it's early days. Personally, I'm going to be waiting. I'm going to be watching this company. I'm going to be potentially looking at the guidance this company brings in 2021. Or alternatively, if this company has some bad news which doesn't affect the fundamentals, then personally I'd load up if the stock dropped to around $47 per share. Anything can happen in the market, and volatility can equal opportunity. So if you guys did find some value in this video, feel free to give it a big thumbs up. That helps out tremendously with the channel. If you haven't subscribed yet, feel free to join the investing family by hitting that subscribe button and turning that notification bell on if you want more investing tips and exclusive stock market picks, which I'm personally investing into. And if you guys want to know in real time exactly which stocks I'm personally buying, selling, and access my entire portfolio and join a thriving community of some of the finest investors on the internet, then feel free to check out that first link in the description below for the VIP membership group. With that being said, thank you guys so much for watching. I hope you have an incredible day, and I'll see you in my next video. Invest safe.